Audit of banks. What is primary security and secondary security or collateral security? Bank asks primary security or collateral while lending to assure that the borrower will return the money to bank in prescribed time. Else banks have legal authority to sell the collateral to recover its money. The nature of security. Primary security, they are offered by borrower to bank finance or against which the credit has been extended by the bank. Collateral security is an additional security. Security can be in any form, tangible, intangible, movable, or immovable. Examples: LIC policies, bankers' lien, guarantees, fixed assets such as immovable assets or plantations, investment, debtors, stock, and gold bullion. Non-performing assets (NPA), substandard, doubtful, and lost assets. If an installment amount is not recoverable in 90 days, it shall be termed as non-performing asset. Categories of non-performing asset. Substandard asset. One which would remain NPA for a period of less than or equal to 12 months. A provision on 15% is required. Doubtful asset would be one which has remained substandard category for a period of 12 months. Subcategory: doubtful up to 1 year, 25% secured plus 100% unsecured, doubtful from 1 year to 3 years, 40% secured and 100% unsecured, and doubtful for more than 3 years, 100% unsecured and 100% secured. Lost assets. Lost assets would be one where loss has been identified by the bank and the internal and external auditor or the RBI inspection, but the amount has not been wholly written off. Discussion between members of engagement team and audit engagement partner on susceptibility of bank's financial statement. The engagement team ordinarily discusses the following matters: errors likely to occur, errors in prior period, method by which fraud may be committed, audit's response to engagement risk, pervasive risk and specific risk, need of maintaining professional skepticism, need to be alert for conditions that indicate material misstatement. Simple words: errors, prior period errors, fraud, professional skepticism, alert for material misstatement, and response to engagement risk, widespread risk, and SR. Control to aid in managing key business and financial risk. Discuss the various requirements for an effective risk management system. The auditor with oversight and involvement of PCWG in control process. Identification, measure, and monitoring of risk. Control activity. Monitoring activities which are regularly assessed and updated. Reliable information system. NPA norm for agricultural advances. There are two types of agricultural advances. One, long-term crops and short-term crops. Long duration crops have harvesting period of 1 year or more. Short-term crops have a smaller harvesting period. This harvesting period is decided by state level bankers committee. Non-performing for agricultural, including crop term loans, shall be short-term duration crops, 2 crop season, long duration crops, 1 crop season. Erosion in value of security or fraud committed by the buyer. If the realizable value of the erosion of security is less than 50% assessed by the bank, then it shall be classified as doubtful asset straight away. If the recognizable value of the security as per bank slash RBI slash valuer is less than 10%, it shall be recognized as a lost asset and written off fully. Interest expenditure by the bank to auditor must ensure that the interest paid on deposit, savings, and interbranch balances is accurate. In case of deposit, whether interest has been provided on all deposit and as per bank rules and RBI rules. Saving bank saving account should be given interest as per bank and RBI rules, and interbranch balances must be given by RBI and head office rules. Reversal of income. If any advances, including bills purchased and discounted, becomes NPA at the close of any year, the entire interest accrued and credited income account in past period should be reversed for provided if not the same is not realized. This must be applied to government guaranteed accounts also. In respect of NPAs, fees, commission, and similar income which has been accrued should be ceased to accrue in current period and be reversed or provided for with respect to past period if uncollected. Further, if branch has wrongly recognized income in the past, it should reverse the interest if it was recognized during the year or provision should be made for amount same. Furthermore, the auditor must inquire if there are large debts in interest income account that have not been explained. It should inquire whether there have been communication from the borrower pointing out differences in interest charge and whether the appropriate action has been taken in such regards. Audit of advances. Check whether the amount of loan given is outstanding as on balance sheet date. Check the amount of loan given pending to bank only. Check whether there is a proper loan agreement. If not, check unrecorded advance. Check whether the valuation is done properly and done by a registered valuable. Check the recoverability of loss is possible. Health check valuation is proper. If not, classify as per substandard, doubtful, and loss assets as per provision and RBI norms. Thank you.